The market indexes remain healthy. As we see, the Dow was up another 110 points today, staying well above the T-line, especially with this doji gap up, providing new strength to the upside. When you see one index up strong, and you see the other index, like the NASDAQ, just trading flat today, but it still was trading above the T-line. But the fact that it wasn't up strong at the same time the Dow was up strong is kind of an indication that funds are shifting from sector to sector versus going out of the market. Additionally, when you see the biggies like Apple continuing its uptrend, also staying above the T-line or using the T-line as support, it's also an indication that there is no new investor sentiment or bearish sentiment coming into the markets. As long as they're continuing to trade the big stocks, they're going to, or kind of illustrates that the bulls are still in control. When the market conditions show there's no major change of investor sentiment, it's just kind of drifting to the upside, it allows the candlestick investor to take advantage of price patterns that are very well recognized, such as this bullish belt hold, bullish engulfing signal on our recommendation of ADVM. Then notice what it was doing after that signal. Still trading positive above the T-line and just about ready to break out. Now, because of candlestick analysis, visually analyzing what is happening in investor sentiment, it allows to make much more clear assessments of where the price move might go. If this was the original trend and it moved sideways, then had another strong buy signal, it's not unusual to see a very quick move to get back up into that trend trajectory. So the benefit of candlestick analysis is not only identifying where the big buy signals are, but what your potential targets could be. So using the combination of signals and patterns puts the probabilities of being in the right place at the right time extremely in the investor's favor. Notice the doji gap up, our best friend signal, continuing in our recommendation of ELF, which makes this your classic pattern. Look at your fry pan bottom, wave 1, wave 2, now going into wave 3, with the expectation of wave 3 being the same magnitude as wave 1. And that's additionally enhanced by the fact that when you were right here on the consolidation back to the 200 and the T-line, you had an inverted hammer doji, then a doji, followed by a gap up your best friend. That best friend signal provided an extremely high probability you're going to be in an uptrend. That'll be it. The market's closed on Friday. We'll see you in the chat rooms on Monday.